Hey guys, it's December 16th and we are officially reached the all-time high record ever for Bitcoin price. It's currently hovering $107,200. I want to share some light as to why we are seeing some increases on the all-time high, which is quite interesting. There's a couple of factors that I've come across. It's to do with the new FASB accounting rules that's going to be coming into effect January next year, and increasing adoption, rampant adoption on strategic Bitcoin reserve. Before I move on, I greatly appreciate your support if you can subscribe to this channel, because I have put in a lot of effort to pull in some high quality content into these podcasts for the benefit of you investors out there. Now, just having said that, let's jump straight into today's episode. We have officially just topped the Bitcoin all-time high price of $107,200. So one of the reasons why I think this is happening, and of course you have to appreciate the full context, not just looking to one particular reason, but in conjunction with a few others, right? Well, one of the reasons why we are seeing this sudden increasing surge in the Bitcoin price is to do with this FASB new accounting rules that's just about to be taking effect as of January next year. Now, I'll explain a little bit more what this means, but before I do, let me just go through one example. Now, just imagine you have a rare collectible item. Let's say you may have a portrait, or you may have an expensive wine, which is the case here. Let's say it's an aged like fine wine as a collectible, rare collectible that you have as an investor. But it only shows the original price tag when you originally purchased it many years ago. Now, that's how US companies have been told to value their Bitcoin, stuck in the past instead of reflecting its true worth. As of today, that changes. And this is what the FASB rules have just approved for all US publicly registered companies. As of today, and particularly coming into effect in January, when everyone returns back to business in the new calendar year, this is now going to be taking effect. And this is actually significant because, as this paragraph attempts to explain in a simple example, for the first time in US history, US public companies can now actually acquire Bitcoin without any excuse, and can actually account not just for the cost of the purchase price of Bitcoin at the point of acquisition, but also if they decide to sell it off, hopefully in the long term, which is how I'm doing it. And certainly the likes of Michael Saylor, who pledged in many occasions he will never ever sell any of the corporate Bitcoins in its MicroStrategy corporate treasury reserve. Well, let's say in years to come, which we all believe is going to rise significant value, corporations can sell at a premium in its accounting books, which is the key change of the accounting rules. And I don't think personally it's going to stop there, because as we all know, the US has the largest capital markets in the world. And even though this is mainly targeted at the US public companies, I'd expect this ripple effect in fair value accounting rules is going to change and have a great impact on the foreign publicly registered companies, because we are living in an interconnected global world, the global financial system. So where there is a significant change at this magnitude, which is the case with fair value accounting for crypto assets, particularly Bitcoin, well, in order to set the level playing field, there'll be other companies outside the US who are going to be taking this accounting rule approach for recording their tangible Bitcoin assets in its balance sheet. And this is going to help a greater surge in corporations and institutional businesses to adopt Bitcoin at a much faster pace, right? Because this has always been a sticking point for the institutional investors out there. So this is fantastic news. And in my previous podcast, I gave different reasons why I think this is going to be set the trend into 2025. It's not just going to stop with the corporations now. I made videos earlier on explaining that the sovereigns are going to be dominating and will be a major theme of Bitcoin adoption growth for 2025 next year. I also want to share another interesting indicator, which I think all of the investors out there, particularly Bitcoin holders or newbies who want to invest in this space. Now, all might have heard the term of hash rates. Now, hash rates is really a major indicator coming from the Bitcoin miner ecosystem. Now, we always measure on the prospect of mining new bitcoins based on the network difficulty, right? What is the network difficulty factor? Well, if you think of it in the old 20th century gold digging, it's the amount of effort, whether it's human labor or whether it's technology and cost to extract the gold from underneath the earth. Well, that's what the network difficulty for mining bitcoins would equate to in the gold analogy type extraction scenario, right? It's exactly the same philosophy and approach. The only difference is, for the first time ever since the recent halving for Bitcoin, which has taken place April this year, the rate of difficulty or the network difficulty to mine new Bitcoins is actually twice as difficult than gold. At the moment, the network difficulty for mining or digging gold underneath the earth oscillates between 1.5% to 2%. Well, Bitcoin is 0.8%. And if you take into account the successive future 4-year halving processes, the next one is expected to take place in April 2028. Well, instead of the Bitcoin mining network difficulty of 0.8, it'll be 0.4 by then, whereas gold will still remain the same, 1.5% to 2%. And future successive halving process for Bitcoin, you just need to divide that 0.4 in 2028 by 2, which will become 0.2. So you can see that the trend of network difficulty is going to double over time and reduce itself to 0, into infinity, which is the denominator stock to flow ratio, right? Is the amount of stock that you have based on the actual effort that would take to extract new Bitcoins, right, from the network. And as a result of today's rise of price and Bitcoin reaching its all-time high in history, well, there's a direct correlation between the network difficulty, the hash rate, with the evolution of the Bitcoin price. So the more difficulty there is in the Bitcoin network to mine new Bitcoins, and the hash rate, which is in its exahash, I can't remember the precise figure, the higher the exahash rate, i.e. the rate of which to mine new Bitcoins by the Bitcoin miners, there is a direct correlation of increased Bitcoin price. Right, this is a very, very interesting statistic just to bear in mind when you go through the Bitcoin mining ecosystem, right? And you can see, as it says here, the hash price has rose 5% this month as Bitcoin mining economics has improved. So just to bear that indicator into mind, that's one of the indicators that most Bitcoiners use to evaluate the entry point to buying and acquiring more Bitcoins in their portfolio. So I just thought to share that indicator just for your awareness, basically. So hopefully you've enjoyed today's episode. Watch out for my other video that I'm going to be releasing later today, which explains in a little bit more depth into the repercussion of the fair value accounting rule as to what it means for corporations. It also runs through a balance sheet example as to how it would be manifested on the balance sheet under the new FASB accounting rules that's going to be taking effect January next year. So have a review of that video. So if you enjoyed today's episode, please don't forget to hit the like button, share the video amongst your friends and network of contacts who are like-minded and very keen to know a little bit more about this space. And please, as I said earlier on this video, I'd appreciate your support and subscribe to my channel because I regularly post some interesting podcasts to do with Bitcoin, blockchain technology and future finance. So until next time,